When it's time to buy a car, you'll probably want to know how much car can I afford. Purchasing a new or used car comes with a hefty price tag. According to Kelley Blue Book, the average new car price topped $46,000 in January 2022, while used cars average around $27,000. With such steep prices, you may find yourself asking, how much car can I afford? Fitting a car into your household budget is no easy task, and financial experts do not agree on any one perfect way to determine its affordability. We shall discuss few ways which will help you determine your affordability today. Calculating how much for a car you can afford before you visit the dealership can save you hundreds, maybe thousands of dollars in the long run. Here are the 3 steps to follow. Step 1 is to calculate the car payment you can afford. Car can I afford based on salary? Instead, you will want to base it off your take-home pay, the amount you make each month after taxes, to get a more accurate picture of your finances. Be realistic about how long you can or want to be making this monthly payment. The new car excitement will wear off in a few months. Soon you'll look at the vehicle the same way you do at the one currently in your driving. Taking a longer loan term will reduce your monthly payment, but over time, you'll pay much more in interest. Also, a longer loan term increases your risk of becoming upside down on the loan, meaning you owe more than the car is worth. Financial experts answer this question with a simple rule of thumb. Car buyers should spend no more than 10% of their take-home pay on a car loan payment, and no more than 20% for the total car expenses, which includes things like gas, insurance, repairs, and maintenance. Once you know the monthly car payment you can afford, you can calculate how much you can afford to borrow for your car loan. With that, you can set a realistic target price and finally answer the question, what car can I afford? The step number 2 is to calculate the car loan amount you can afford. Factors like your down payment, monthly payment, loan term, whether or not you are trading a vehicle in, and your credit score all are helpful in calculating how much car you can afford. Additionally, getting estimates for other car-related expenses like your car insurance or annual maintenance can give you a better picture of how much you will spend on your car over time. Study about each factor to learn about how they affect your car budget. Let's look how your monthly payment should be. Because it's recommended you spend no more than 10 to 15% of your monthly after-tax income on your car payment, your monthly payment will significantly influence the kind of car you can afford. For example, if your monthly take-home pay is $3,500, then that means that your car payment shouldn't exceed $350 to $525. You can lower your monthly payment so that your payment better fits your monthly budget by choosing a longer loan term. However, it's important to keep in mind that a longer loan term means that you will pay more in interest over time. Let's now see about your down payment. The amount of money you'll be able to put down on your car purchase help you to afford a more pricier car. Most experts recommend that you put at least 20% down on your car because new cars depreciate quickly. A 20% down payment will prevent you from going upside down on your loan in a few years. Let's now look at your loan term. The loan term or length of your loan influences how much you will end up spending on your car. Shorter loan terms means higher monthly payments but less money paid in interest over time. And longer loan term mean lower monthly payments and more money paid in interest over time. If you are interested in paying less overall, a shorter loan term is best if you can afford it. But if you need to make your monthly payment more affordable, a longer loan can help you do that. Let's look at the trade-in value of your old car. Trading in a car can also help you afford a more expensive car or make it so that you need to borrow less money. For example, perhaps you want to purchase a $22,000 car and you are trading in a car with a trade-in value of $8,000. If you have paid off your trade-in, that $8,000 would make your net car purchase only $14,000. In the event you haven't paid off your trade-in but have a small amount left on your loan, the dealer will buy out the rest of your loan using some of your trade-in value. Using the same example, if you had $2,000 remaining on your loan, this would be subtracted from your trade-in value. Then only $6,000 would be credited towards your purchase, making your net purchase price to $16,000. Let's now look at your credit score and loan interest. Your credit score impacts the interest rate of your car loan and ultimately influences how much you pay for your car in total. Higher credit score tend to have lower interest rates, but the type of car you are buying can also affect your interest rate. Used cars tend to have higher interest rates, while new cars have lower rates. So what is the car price you can afford based on your annual salary? Basing your car payment off your current salary is one way to estimate how much car you can afford. But using your actual take-home pay amount will give you more accurate insight into how much you can actually spend. In case you only know your annual salary off the top of your head, use this table to get a general estimate of your monthly car payment. The step number 3 is to consider your car purchase options. If you can afford the car you want or need, it's good to explore other options so you can still achieve your goals without going into debt. Let's now look how leasing and buying used car can help you afford a car. So, should you be leasing your car? Whether you prefer the look and feel of a modern car or constantly want the best that car technology has to offer, a new car may be the best fit for your goals. However, if you are finding that you can't afford the monthly payment to buy a new car, leasing may be a better option for you. You can lease the car you'd like for a lower monthly payment than if you were to buy the car. But there are caveats to keep in mind, like mileage limits and the fact that any money paid towards the car won't bring any value back to you. Should you instead buy a used car? If you're not picky about the kind of car you drive or you just want to prioritize your finances, buying used car is an affordable path to car ownership. Used cars tend to be lower in price than new cars and will therefore have a more manageable monthly payments. Additionally, their value also depreciates a lot slower and associated car expenses like insurance tends to be lower. So should you go for a new car? Sometimes you just want that new car smell. If buying new car is a top priority, make sure you do your research and compare car prices from different dealers. Buying a car is a process, so come prepared with the fair market values of the car you want so you can negotiate the best deal. Additionally, consider purchasing a base model without all the bells and whistles if you have a more modest budget. Whichever car you have decided, you can use an online car shopping sites like Edmunds, Auto Trader, Car Gurus, etc. to find different models listed by price. But remember to set the bar low. When searching for cars, set your maximum price below the total amount you think you can afford. Sales tax and fees can easily add up to an extra few $1,000s. So what is your best option to buy a car? There is a case to be made for each of these approaches we saw today according to your affordability. It is essential to recognize your car buying history. And if you do commit to a long-term loan for the car, make sure you drive the vehicle for at least few years after it is paid off. In the end, the best car buying scenario will be the one that takes into account your bills and other financial responsibilities. Don't shop for a car which is at the top of your budget. And if it is a stretch for you to buy now, consider saving a bit more and revisit the shopping at a better time. The most important things are to know your budget and remember that there is more to owning a car than just a monthly payment. Let us know your thoughts in the comments below and make sure to subscribe to the channel so that you won't miss any of our videos on personal finance and making money online and you get notified. Thank you for watching. See you next time.